Okay. So now, since you are a CPA and you've been an Amazon seller long enough, you tell us what is the best way to structure your financials? Because as you know, Amazon has so many line items. So what do? You look at every single one, and because you want to be able to like consolidate a number of them and say, look at this. So give us your way to structure it so that it's not clutter, we're not drowning in numbers. And also tell us what are the metrics that come out of it, because numbers are not metrics, and metrics are totally different. So what metrics come out of those financials?
Yeah, absolutely. So I think one rule of thumb that I use when I'm deciding whether I want to include something or not is the phrase, what gets measured gets managed. And there are certain things that you may not be managing. However, let me give you an example. Inventory storage, not long-term storage fees, but just inventory storage. This is something that we wanted to take a really close look at and see, are we losing regional coverage if we have, say below 30 days of inventory on hand? And at what point do you have diminishing returns? That was something that we wanted to manage. Therefore, it needed to be a line item on our financial statements. And so that's something that when you're making a decision on should I include this or not, one, ask your bookkeeper, ask your CPA. Do you think this is something that would be helpful to track? But that is what I use as kind of the overarching theme of our financial statements. If it's not something I'm going to manage or make a decision based off of, then I'm going to put it in other miscellaneous business expenses and move on, or have an account that kind of describes what that fee is. The other thing I would say, and as Amazon has made international expansion within reach for a lot of entrepreneurs, I think that breaking out your financial statements by marketplace is critical. And we do this, one thing that I really like to look at is gross profit after PPC spend. And I'll get into this in a little bit, but PPC behavior is very different across marketplaces. For instance, I've got a brand right now over in the UK where we were having some issues with inventory. We were going to stock out and we turned off PPC, which is kind of a no-no. And we had 100% organic sales on that particular product. Now, in the US marketplace, if we would have done that same thing, our sales would have really fallen off. And so when we're making decisions on PPC spend and PPC allocation, it's really helpful to have that broken down by marketplace. The other reason, and this is just to ensure that you end up with correct financial statements, is on currency. You're often dealing in different currencies, and breaking those out separately helps kind of keep things straight. When you get your credit card statement back at the end of the month, and you have all kinds of PPC spend from different marketplaces. And so I would say broken down by marketplaces is something that's very important. The other thing, and this could be something that you are getting from your bookkeeper. This could also be something that you do after the fact, after you receive your financial statements, is stating everything in dollar amounts as well as a percentage of revenue. And let me give an example on this. Say you get your financial statements back, and in the month of November, you had $2,000 of refunds. And you ask yourself, is that good? Well, what is it as a percentage of revenue? Well, if you had $10,000 of revenue, you've got a 20% return rate and you've got a big problem. Now, if in the following month you have $2,000 worth of refunds and say you have $200,000 of revenue, well, now you have a 2% return rate. And for any brands that I manage, that's very well performing. And so I think that that's something that's really important, is expressing things as a percentage of revenue, because it really allows you to pick up on some trends, especially if you have a seasonal brand. For a brand that really peaks in November and December, simply analyzing dollar amounts is not as helpful as analyzing the percentage of revenue, because you can really see the net impact of the dollar amounts expressed as a percentage of revenue. So those are, yeah. Does that answer your question?
Yeah, I mean, I want to complete the whole structuring, but something you said is so key. So I had this is last year when aggregators were busy acquiring all the brands, and of course after COVID situation changed, but before COVID, immediately after COVID, it was all feeding frenzy as far as aggregators, brands being acquired. And I had the chief financial officer of one of the largest aggregators. And he said something so concise and so significant, I always repeat it. He said, percentages are the language to help us interpret financial performance. So, and I just heard you say something similar. It said percentage of revenue will tell you more. And ultimately, that's what I will say. If your financial metrics are dollar values, that's not a metric. If the financials that you are tracking are percentages of revenue, that's a metric. So that's the way to separate. And then you have to decide, okay, what would make sense?